Yeah. Two. Yeah. Aye. I'm jacking the beat, you calling the cops. The yapping is cheap, I call you the ops. The rapping is heating, it's all cause of pop. You get a leak for the ball, get a drop. Feel like I'm wrong when I double it back, cause I'm making it harder to catch that. But I covered the ticket, I call you to visit. You tipping and hit up the cash app. Baby girl, been around for it, yeah. In the old days, I was stuck in old ways. Never really trying to flip the old page. Young man tripping at an old age. Thinking I was flicking, had a low wage. Led the broad days, then a slow praise. Thinking it'd be different, it would gon' change. Then it really didn't, it's a cold game, yeah. Ay, all I really wanted was the money in the pocket. Got over money, but the money ain't a topic. Like Bill Doe and the money gotta stop it. Kid need food and the whip need juice. I'ma get these views when the
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partner Dale and Cliff back in the saddle again, guys, on another Friday, Real Estate Training Friday. Cliff, what's going on with you, baby? How you doing big time?
Man, I'm doing good, man. I'm not sure everybody can see you. I don't see your video right there. We go.
There we go. Okay, hey
All right,
guys,
yeah.
we on the fly. We on the fly. On the fly, y'all. This is live in living color. It is, baby. Man, Cliff, baby. How was the week, bruh? Did we get the bag?
Oh man, great week, phenomenal week. You know, got the bag, got the sink, got the house, got everything this week, bro. It's a good week.
Ooh, brother, I got the subdivision, baby. I let your partner, man. And I'm aiming for the city. You know what I'm talking
Right. Yeah.
literally, hey, I got some stuff cooking in the bag, and yes, I did get that big bag, maybe even a vault. I got some stuff coming y'all way, baby. Man, Cliff, man, we've been kind of in the kitchen cooking a little something up, man, and it's been going really well, man. But yeah, we got the bag, Cliff, man. If everybody doing well, how's everybody doing on your side, brother?
Man, doing good, doing good. Uh, Everything going good, man. Yeah, it was very blessed, man. Did a portfolio,
Ooh,
so was able to work with a trust fund that had
ooh,
roughly, I mean, it was about 30 different properties. Had to go
mm,
through, had to
mm.
analyze that, man. Learned a lot about the Garland market, about the Dallas market.
What you
So, man, it's rolling.
Hey, what you say? Did I hear the word? It was one of those words that kind of tickles my ears all the time. Portfolio.
Right? Yep.
Oh man, you said 30 now? 30 to 30?
Yeah. So I
Man,
was
not 30 for 30 properties.
30 properties, yeah. So
Yeah.
I talked to the fund man or the portfolio manager, talked to the owner, and I talked to the guy who is on the board, the
Mm.
main chairman on the board. So we had to have a conversation, a discussion going over the asset value of the portfolio of each individual property, all the
Oh,
details. So,
oh.
it was a good conversation, good opportunity.
Yes, sir.
Yeah.
We got the bag, y'all, man. And
Yes, sir.
on my side, man, I have been really looking at a lot of mid-tier towns, flying out to Mississippi to talk with some high up people there for a city out there. I got contacted by a college about doing some HBCU to do some developments out there as well. I'm not ready to announce that yet, but we're kind of beginning that discussion a little bit as well. I'm trying to own Mississippi, y'all. Just to live. I'm keeping it a band with you. I'm trying to get
Okay.
it. A good friend of mine, a pastor friend of mine, actually owns some land out there as well in a very affluent town in Mississippi, and he wanted to see about getting together and us doing a development together. Yeah, they coming, y'all. So we still looking at completing Clifford's new flash to you those apartment complex acquisitions on the campus of a Big Ten school. If you
Mm,
know what I'm talking about, Cliff. Mm,
right. Yeah.
that's
Yeah. That's a
That's
good
that may be
opportunity.
back on the table, boy. But yeah, we up here, man. Get in. We told y'all it's coming. We're not Dion, but we coming. We coming. But yeah, guys, man, let's jump right into it, guys. The current market analysis, Cliff, man, something actually happened this week. You said it would actually happen next year. I said I won't be surprised if they do it. Um, but we both kind of agreed that this is going to happen. We didn't know when it was going to happen. Would that be kind of safe to say?
Yeah, you can say that to a degree. Yeah.
Okay. Now what happened, y'all? Well, the Fed paused the second rate increase. We're gonna discuss we're gonna give our diatribe of why that may happen, why that's happening, and what could be the counter move in a second. But let's look at the news talking about it, and then there's going to be a former governor on the Fed board that was not in favor of this pause. Here we go. Let's see what's going down, y'all. Boom. Here we go. Let's get it again.
The Federal Reserve today paused its recent interest rate hikes, leaving them unchanged after 10 straight increases in its bid to fight inflation.
You trying to show the video?
CBS's Weijia Jiang reports the Fed did signal that
Is it not playing?
There we go. It's delayed.
Okay.
A little delay on
more
it coming
hikes
up.
are likely in
Okay.
the months ahead.
Okay, here we go.
The Federal Reserve's pause on interest rate hikes came with a warning from Chairman Jerome Powell. It may not last for long.
Inflation has not really moved down. It is not so far reacted much to our existing rate hikes, and so we're going to have to keep at it.
Inflation has come down from its peak of 9% to 4%, but the Fed wants to get it to 2%. While the cost of electricity, eggs and meat, and gasoline went down in May, overall grocery prices were nearly 6% more expensive over last year. The prices of margarine, flour, and bread all up.
We've just seen huge increases in core staples that we need to make our product.
Bakery owner Jenna Huntsberger said the rising costs have taken a toll.
We're holding steady, but we're not seeing a growth in our sales. And I do think that's because consumers are just tired of inflation and they're really being very cautious with their discretionary income.
Over the course of 15 months and 10 straight interest rate hikes, the 30-year fixed mortgage rate has risen to nearly 7%. Credit card rates have soared to more than 20%. CBS News business analyst Jill Schlesinger.
The question for anyone sitting at home is, will these interest rates come down fast enough so that I can borrow money when I want to at a more affordable rate? I think it's safe to assume that the cost of servicing a loan or getting a new loan is going to remain high for the foreseeable future.
Wow.
The Federal
So Cliff, man, that is, man, brother, what you think about that whole ordeal there, brother? What you think about that whole thing?
Yeah, I mean, there's got to be a reason why you got your core staples going up different than the rest of the market. So that's probably supply chain. You might have some issues going on there. Man, yeah, at some point the interest rates have to come down. That's what I see.
Now, number one, I'm going to say that 9% out of 4%, that's BS because they just changed the calculations from every 2 years to every year. So that's a BS number. Can't rock with that at all. Number two, I agree with you. The core stuff is still up and going up even more. And then you had the Fed chairman actually say that they're still trying to get control of inflation, which leads me to conclude that Congress and the executive branch will not stop printing at all. So there's very little he can do because he doesn't want to, in his mind, overstep the boundaries of trying to tell Congress and the executive branch, stop this. Stop printing. You agree or you disagree?
Yeah, oh yeah, at the end of the day, I mean, this is all, if you print too much money, period, you get inflation, right? So that's where we agree on that, right, Dale? We agree on that.
We do.
Right. So we on the same page there. Now, what the Fed is going to attempt to do is something that's going to be a little interesting. There, at some point, this is what I'm calling. I've been calling a couple things.
Okay.
Right? I'm gonna call a couple things. I'm gonna
Say it
call
with your
something out.
chest. Say it with your chest.
You're going to see the interest rates drop, but the Fed still sell the assets on their books. So they're going to drop interest rates and sell their assets simultaneously.
So who's going to buy those assets? Because if what you're saying is correct, you now have bad assets.
The I mean, let's call it what it is. The Fed can sell that whatever price they want. It ain't really real money to them.
Yeah, I'm rocking with you, but on the other side, you actually have buyers that they're buying these treasury bills and these bond bills, 'cause that's what we're really talking about.
Right.
And if right now it's at a 4 or 5%, it's right now, which is really unprecedented. It
Yeah.
didn't make any fiscal sense at all. And now you have people buying at 4 or 5%. Now they have that. If we look at what you're talking about, the Fed, what they didn't do is they didn't turn around and then drop it down, let's say to 4 or 3%. Now what's going to happen? You have people that are now, it don't make no sense. Now they own bad assets. Am I right or am I wrong?
I mean, the people who are buying those assets, they're gonna want the high interest rate bonds, right?
Yeah, but the
But
Fed is not lowering down based on this hypothetical. They're lowering down the rate now to hypothetically 3%. Now what?
you still there's still gonna be demand for the bonds. Still gonna be demand for the bonds. Still
Why?
even at 3%, right?
Why?
But what you're gonna see is asset prices go up.
So what you're saying is this is they're trying to lower the rate to spur borrowers to go out and borrow more money because we're in a debtor nation. Is that right?
Right. Yeah, they need more. They want more liquidity in the system. They don't want it to come from them. So that's why they're going to sell, trying to bring money out the system. They're all, I think, I forget what the number is, but it's like 4 billion or 40, 20 billion that they're pulling that out the system every month by selling the bonds, right? They're
Yeah.
pulling that out. Now they're going to cut interest rates so the money that you have is doing two things. It's buying the bonds,
Okay.
and then it's being borrowed to go buy more products so that the money
Okay.
being introduced to the system is coming from the banks, not the Fed.
Okay. So here's my question then. Let's go down this hypothetical again, guys. Is for this to work, the other partner has to not print any more money. And this is why I think the reason why they're actually pausing this. Because what we have going on right now, Cliff, we have a debt ceiling discussion now, a government shutdown discussion going on now, right? So you have one side that want a continuing resolution, and you have another side saying, hey, we should just print some more money. So for what you put up forward as a hypothetical, the executive branch and the legislative branch is going to have to cut down the spending domestically, right? Lower the regulations and lower taxes for your plan to work. Now, do you think that they're going to do that?
No, they ain't doing none of that.
So, based on what I'm hearing you say, there's no way in a fiscally responsible context the Fed can lower down their rate because then they commit suicide.
It depends how many bonds they selling. If they're pulling enough money out the system. So, for example, if the government is spending, I'm throwing out a number, right? Let's say $1 trillion,
Okay.
but the Fed is pulling out $1 trillion. It's a wash.
But okay, let's go through that. Go down that hypothetical. You said that the Fed is pulling out $1 trillion while selling $1 trillion. Who is going to buy? Number two questions: who's going to buy that a bond that or a T bill that there once was at 5%, now at a 3%? Because now by doing that, you create a fire sale now.
Yeah, man. So basically what's happening is the United States is lucky, right? We gifted. The U.S. bond is the number one most trusted item. I mean, that's to every bank around the world. Every bank, China, Saudi Arabia, you know what I mean? Egypt, everybody. They all buy U.S. bonds because
Okay,
that money is gold. It's
gotcha.
gold. If
Uh-huh.
even because with them, they dealing with other countries are basically still buying our bonds because as bad as inflation as we have, they worse. They worse. So to them, they have 100 billion, 200 trillion dollars at other countries. They'd rather go buy U.S. bonds, earn
Okay,
3% on that,
okay.
and do exactly what you're thinking the other countries do. They borrow against that,
Of course, of course.
go spend the money in their own currency.
Now, by having your context, guys, this is hypothetical. This hypothetical context, you understand that the other partner, the executive branch and the legislative branch, this gives them license to never stop printing, and they won't at all. You understand that Biden actually put up a $7 trillion budget, which will probably get up to 10 trillion after they through. This is for the annual budget. So I'm trying to figure out if the Fed lowers down the interest rates, they can't sell enough assets to plug in that delta there. They can't.
It's going
It
to
doesn't make any
depend.
sense.
It's going to
Okay,
depend. Well, yeah, I mean, it's going to depend how much new currency is being introduced, right? Because then you got M money, you got M1 money, M2 money.
they haven't
How much?
spent $1 trillion of the COVID money. That was 2 years ago.
I
So
mean,
so 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 now so now they're introducing 10 trillion more dollars.
yeah.
So how is the Fed going to basically plug in that delta there?
I don't think they're going to do a dollar. You're always going to have inflation. Listen, we're going to get that off the back. It's always going to have inflation.
Okay.
So what they're going to try to do is just they have to cut for two reasons. One, it's going to have to get the economy back to going again. But right now it's still the GDP is still strong. But they want to even have a stronger case for that, right? Number two, the United States is paying interest. That 5% bond that everybody got it. I got me some 5% bonds. Everybody got 5 because you can get 5% risk free, 5%.
So if that's right, if you look at the debt clock, we are bringing in roughly about $4 trillion worth of interest coming in. That's nice amount of interest, right? Coming in profit. We're paying out 6 trillion.
Oh yeah, the bond.
We're 2 trillion in the hole, bro.
Oh yeah, they not.
This is.
That's what I'm saying. Is the United States is borrowing money at those high interest rates. If you remember, I don't know, you got to follow it and kind of see. But
Okay.
Janet Yellen said a couple weeks back, or a couple months back, really, that when the interest rates were at zero, she was saying borrow,
Oh yes, she was, of course.
borrow. Now that we realize it was inflation, that was a horrible idea. And guess what the government did? They did exactly what they wanted. You said, "Oh, spend more money? Bet we're gonna do that."
But now Janet Yellen saying that she's pleased with what's going on with the economy. This is the Treasury saying that we are pleased with what's going on with the economy. What you smoking on? Because I need some of that ooh wee.
She's saying, "Look," she's saying, "Look left, look right, just don't look at me."
Yeah, that's what she said. Like this smoking the way is BS, man. Oh man, now Cliff, you brought this up, man. That I want everybody to see this here. Cliff brought this up, and I just said, "Whoa!" Cliff followed this a little bit more than I did. Cliff, you should have sent it to me. Cliff, what do you think is going on with this, man? What's going on with this, bro?
Oh, yeah. Open Doors getting killed. I'm at 15% in a day. That's
15% a day.
that is hundreds of millions of dollars in losses.
Wow. Now, for people don't know, who is Open Door?
So Open Door is basically a company that buys real estate. They basically are a big company that flips.
Yep.
But they flip on very small margins, right? If you're looking
Sure.
to sell your house, you can sell it to them. They're gonna try to fix it up a little bit and then put it back on the market.
Yeah, trash. That's a trash model. It's filled out every single time. Yep, you know. Yep, that's why, because of the fact that they have these little small margins. It made no damn sense unless they ain't using them and they're using your money.
Oh yeah.
That's a BlackRock play again. I'm sorry, my bad. So I won't go down the rabbit hole because we can go down there and I can really get y'all scared. But go ahead, Jake. Go ahead, Cliff.
Oh yeah. So Open Door, I mean, they get killed. They have too many houses on their books. The model is not working,
Nope.
right? So no one knows what to do with it. You can see right now it's going for $2.50 a share.
Come on, bro.
And you can see at one point it was going to almost 40.
Come on, bro.
It was at Dale. It was at $40 a share. It's at $2.50.
Oh, it was at $40 a share, Cliff. Now it's at $2.50.
Man, you see it. Look at it.
Shut that shit down. Shut that shit down right now. Matter of fact, if you are the owner of Open Door, holler at your partner. Let's talk business. I can take a lot of stuff off your balance sheet, strategically, of course. But this is a terrible model unless this was the goal from the get-go. And I believe that was the play. But hey, I digress, man. Cliff, you want to say anything, man, before we go to this former governor that says that he actually disagreed with the Fed pause?
Okay. Now, just like I said, this is just a look into what's going on in the real estate market right now. It is a depression in real estate. It's a depression, not in terms of price, because there's still no inventory. Nobody is selling their house. Nobody. Why? Why would you sell right now? Interest rates are high, and you probably sitting in a 2.5%, 3% mortgage. There's no reason to sell. So there's no incentive. So in Dallas right now, we are down, I think, almost 40% in listings.
Now, this is in Dallas. Go ahead, fam.
And let me break it down for y'all who don't know what's going on. Most people go, okay, real estate's down. Okay, maybe some realtors don't. Nah, let's break it down about what that means, because you got to understand what real estate means. Number one, you got the investor who's got to make money. He's got his shareholders. He's got to make money too. Those two people, they out.
Yep.
The real estate agent is out. The insurance agent is out. Right.
Yep.
You have cleaning companies for turnovers. They out. Title companies are out.
Holla at you.
You see what I'm saying? Construction crews who usually fix up the old house, they out.
Peace.
Right?
You
got sales tax on all that's going out. Marketing and advertising is going down because nobody's advertising because there ain't no listings.
Nope.
You got to understand what that means, that all these people, all of those workers are out. They out of jobs. There's no money moving in the real estate market right now. It's flat.
And for all those, because Cliff, you got a lot of pushback on social media, on TikTok and YouTube, on our shorts. Okay. They were saying that you don't know what you're talking about. There's a lot of inventory out there. and I'm like, okay, you just heard what that man said. Let me say it with my chest. Shut the hell up. You don't know what you're talking about at all. If you can give any type of counter argument than what he just gave, I love to hear it. Because if there's plenty of inventory on the market, please show me where. I would love to see it. Where? How about your partner? There ain't none. Am I right or am I wrong?
Nah, you're right. There's none. Nobody who sells a house at a 3% interest rate and buys back at 7%. Nobody does that.
Nobody, man. Hey, man. Hey, Cliff, say it with your chest again for the folk in the back row, because some people they didn't hear you. So say it again for the people now.
But okay, then listen. Nobody sells a house at 3 and buys it at 7. Nobody. It don't make sense.
If you do, call me. I'll write a check. If you do, baby, call me. But if you don't know what you're talking about, please be quick to hear and slow to speak. We're not saying this because we think that we end up be all. No, we know the market, guys. This is a licensed appraiser and an active investor and a general contractor. I'm a private equity investor and a venture capital investor and an active real estate investor and developer. Do what we do to feed our families. That's what we do. And so I would say this here: if you can produce different data that actually that's contrary to this, I love to hear it. I love to hear it, and I'm open to being persuaded. But don't come to me with some foolishness, because I'm gonna smash on you. Skip it 1,000, which I'm gonna smash on you with facts, data, numbers. Okay, now, Cliff, let's go to this former Fed, and he gave his name too. His name, Cliff, is Frederick. Let me see, Frederick. And where he go? There he is. Frederick. I can't. Michigan. Frederick M. I am not going to bullshit this man's name. Cliff, he said it was a bad idea to do this. Let's see what he has to say about that real fast.
There's been talk from Fed presidents about a possible pause in rate hikes, but nothing is guaranteed until Wednesday at 2 p.m. Eastern time. Joining us right now is Rick Mishkin. He's a former Federal Reserve governor who is now a professor at Columbia University and a CNBC contributor. And Rick, you're not a fan of this idea of pausing.
Yeah, I actually think that I can understand why you might want to do it. It's not terrible if they do it. But I think that we're in a situation where inflation numbers are still high, are very slow to come down towards the 2% target, particularly in the underlying inflation, which is a number that is much more reliable in telling us about what future path inflation will be. The economy and labor markets are still quite strong. There is some weakening, but we've got a long way to go before we contain inflationary pressures. And therefore, I think that the Fed is going to have to raise rates, and better off doing it now to show their strong commitment to keeping inflation under control. Particularly important because they did blow it earlier on when they were too slow to start raising rates, but luckily got them the stick and really started raising rates quickly.
You don't sound super concerned, though. If they pause this time around and then raise in July because the next meeting's just the next month, that would be something that wouldn't be catastrophic, in your opinion?
No, I don't think it's catastrophic. I think the key is the communication here, which is the Fed's got to communicate, number one, that they think that the bias is certainly that they have to keep raising rates, that they have not got inflation under control the way they want to. They still have some work to do, and that's something that they have to commit to. The second issue is that's maybe even more important, is that the markets have continually talked about the Fed easing when the economy starts to slow. And I think the Fed has to be very clear that until inflation really is heading down to the path of 2%, and it's really clear that is happening, that they're not going to pivot, they're not going to reverse course, that it's going to take a sustained period of high interest rates to get inflation under control. And that's a lesson that they should have learned from the past. There have been periods, for example, even during the Volcker disinflation.
Great. Okay, that's enough of that. Enough of that riffraff. Thoughts?
I mean, the idea that you need to continue to keep raising rates to me is wrong. You've already seen the interest rates drop from 9 to 3. You're only trying to hit 2. I understand the drop from 3 to 2 is going to be more difficult.
But Cliff, hold on. I gotta push back on this lower inflation rate, man. You know that actually happened, bro, because they changed the calculations. It's a bullshit number. So ain't nothing happened though, bro.
It was BS before. Why every 2 years? Why not every 3? Why not every 5?
I'm rocking with you, but the bullshit though, man. Talk about it's down went from 9.1 down to 4%. Based on you changing the calculations, it's a lie. It's bullshit. Come on, man. This smoke and mirrors BS, man. I gotta call a spade, man. Give us the truth, man. Hey, man, we fucking it up right now.
Oh yeah, all the numbers. We know the unemployment rate. Oh, okay, the unemployment rate is down. Well, we don't count people not looking.
Thank you. What is this, man? Go ahead. I'm sorry. Go ahead. None of it makes any sense. They always gonna do that. If the number don't look good, change the definition of the number. I mean, I mean, bro, this is a train wreck, bro. It don't make no damn sense, bro. Cliff, where am I wrong at, Doc? Hold your partner accountable, please, bro, because they keep bloviating about numbers that they manipulated to present a number that is false. It's false. It's a lie.
Because it's psychological. Some of this is psychological. You already know, Dale. Sometimes money is psychological. It's not even a real. The money itself is not real, right? We already know that. That's a psychological piece in itself. What's a dollar really worth? It's only worth what you can buy it with it. You know what I mean? So it's worth what the item that you're buying is worth. You want to buy gold? It's what gold actually produces, not the dollar.
I got you.
If all the electricity went out, the money in the world ain't gonna mean nothing. It's gonna be the man who got wood, food, and all the other stuff, right?
I rock it with you. If you guys believe what they talking about, brother, may God have mercy upon your soul. Because I mean, you can believe everything if you believe this garbage. I mean, this is just straight garbage. Now, okay, Cliff, what type of deals do you see that they're going to be coming on the market?
You can have to me right now. You're looking at desperate sellers.
Okay.
Because if you can wait 2 years, that's what you're doing.
Yeah.
So if you're selling right now, it's because you have to. Most likely, right? It's because you have to. So right now, you're gonna see more desperate buyers enter the market. Right now is the best time to start just throwing out offers. I saw several properties here in Dallas. I'm talking about 10% drops from 500,000 to 450.
I'm actually seeing 20% drops in some places in Dallas Fort Worth. And that there no one's moving because the cost of the capital to borrow is too damn high. Like for instance, we actually, to get a conventional mortgage right now, the rate you're going to pay is conventional means that you put more 5% or more down. Your rate is going to be between 9, 10, 11, or 12%.
Yeah. Yep.
If you are buying FHA, or maybe even VA, your rate's going to be probably between 7.5 to 8%. That's what it is. And I see a lot of mortgage brokers not really doing a lot of loans. They're doing some, but not a ton of loans at all. Because the line shed of a lot of the income was refinances. They were killing on refinances.
Oh yeah. During the
Killing.
pandemic.
Oh
man. Yeah. When they cut rates, that everybody make money.
Everybody made money. So a lot of the fake success. So guys, joint venture investing, it's going to be good because of the fact that a lot of these desperate sellers have little to no equity, or they have to move because of job transfer, or they have to move because they can't afford payment no more, because they borrowed more money on their credit cards. So now they don't have enough money at the end of the month to pay all the bills. That's a reality now. So a lot of wholesale deals as well, also properly structured, also joint venture investing. That's going to be huge. Okay. I was talking to a realtor friend of mine that wants to partner with us here locally. And he was telling me, yeah, I'm getting a lot of these buyers, these sellers that have little to no equity. I'm having to get very creative just to sell them. Like to sell it, we're talking about like very creative. Very creative. I said that makes some sense. Makes some sense, guys. You want to say anything, man, before we end it?
No, man, just wait and see. I'm making another prediction. You're gonna see, as I've been calling, you're gonna see cuts next year. You're gonna see the market get cuts. And I think that's partially political. I think it's partially strategic. I think they're trying to spur the market back, but we're gonna see, man. I think a lot of stuff's up in the air. They messed up the economy, and now the same people that messed it up are trying to fix it without admitting to making any mistakes. So we're gonna see where we end up with that.
That one I can agree on Cliff. I think the cutting is going to be more political because you're in election year, and I think that by cutting, and if Congress and the executive branch does not stop printing money with these elaborate budgets, it's going to further wound the economy. You have to lower taxes, lower regulations, open up the leases on all of the energy that we have when it comes to petroleum and natural gas, because we're swimming in it as well. Also, open up the American ingenuity of the economy for you to right this ship. Because right now you have a lot of higher regulations, counseling of leases when it comes to natural gas and petroleum as well, and fossil fuels as well, with higher taxes and inflation. That is recipe for a constraining economy. And you see Congress and the executive branch trying to manufacture cash flow, hence inflation. So that's what I kind of see, guys. Guys, a couple announcements before we get off, guys. Hey, guys, the real estate masterclass, guys, that is going to be on October the 7th, guys. It's going to be October the 7th at 12 noon CST. Okay? October the 7th, 12 noon Central Standard Time. Okay? We're going to begin marketing that on Monday. It's going out to our, it's going to be marketed on Monday. And so it's going to be epic on this one, guys. We're going to have 1 to 2 hours with me and Cliff asking any questions. We even walk through some of our transactions as well, kind of, so you can see how we kind of structure some things a little bit. But we're going to answer all your questions on this as well also. Now, also, for those that are in the Cash Flow Club, okay, you will be getting an alert on Monday about the Cash Flow Club. That's going to be next Saturday, right? September 30th. It's going to give you the time and everything in that email. Make sure you reserve your spot. Again, it's free because you're already in the Cash Flow Club. And if you have any deals, bring your deals. We'll take a look at them. If you need help on scope of works, bring it. No problem with it at all. Usually for the members of the Cash Flow Club. Thank you guys for your patience. We've been kind of re-engineering our entire system, guys, so that it's easier to kind of flow and communicate with you guys on a more frequent basis as well. We'll begin having our Cash Flow Club meetings every single month. Okay? Again, Cash Flow Club next Saturday, September 30th, right? And then you have the Real Estate Masterclass October the 7th at 12 noon CST. Cliff, you want to say anything, man, before we end everything, brother?
No, man, just I'll leave this last note. So when we go over that, join the club so at least you get to see some in-depth one-on-one, right? So we get to answer some of your questions, go over things that you might be interested in. And like I said, every week, one deal can change your life. So hop on, join us, and see where we can help you out.
Sounds good, man. Well, guys, man, thank you so much for your time. God bless you. You know, we end it every single time. Before you leave, and while you can, you see that thing, take that damn picture for your mama and them, and holler at your partners. We see you next time, guys. Peace, guys. Holla at you.
God give thanks. Bless God, give thanks.